The April Consumer Price Index just came out at 3.8%, which is a solid 1.8% above where the Fed wants to see the inflation numbers for them to continue making rate cuts. With this being the highest inflation rate since May of 2023, experts are now floating around the idea of another Fed rate hike rather than rate cuts going forward. Now, before you start saying this sounds like hyperinflation, hyperinflation is determined by inflation increasing by 50% in a single month. Since we're only at 3.8%, we did not see a 50% increase, so we're not near hyperinflation numbers yet. This has some big consequences for home buyers and home sellers alike. Mortgage rates are very closely linked to the 10-year Treasury yield. So whenever we see inflation numbers rising, we're going to see upward pressure on the 10-year Treasury, which is going to cause elevated and rising mortgage rates. For all of the buyers out there that were trying to wait it out for rates to keep coming back down, you might just be about to miss your window. Sellers, if you're still pricing strategically at or below market value, if you're marketing the property well and you make sure that the house is in good condition, especially during showings and open houses, these houses tend to keep selling at a normal pace. The houses that are still sitting on the market after a long time are the homes that are 1, overpriced, 2, they're in poor condition, or 3, they're just not being marketed well by the agent. You can absolutely still sell your home successfully and for a reasonable price, even in an inflated rate market like this, but it takes a different strategy.